Vidhi, can you hear me? And can you view the screen also? Okay, okay. We'll start now. So we covered relative valuation in the morning session. Now the last part which is left in equity research is the intrinsic value approach. So in intrinsic value, basically what we try to do, we try to find out what is the true value of the company. Whatever is the market price is given, we try and test through fundamental analysis whether the approach or whether the current price is the right price of the stock or not, or where stock will be trading 1 year down the line, 6 months down the line. So what we do is generally we try to see what is the earning potential of the company, and in future what will be the earning potential of the company, and we bring that to the present value. We will come to that slowly and steadily. So right now, finding what is the earning potential of the company, right? So in my earlier lectures, I had mentioned the true earning for any company is EBITDA. This is the real earning. Yes. Right? Now, depreciation and amortization are non-cash expense. So we will from EBITDA, we are removing this D&A right now. So we are left with EBIT, right? Yes. This is earning before interest and tax. Assuming we are valuing the company, so in enterprise value, we saw that we include debt. Yes. So I will include interest over here. Okay. But I need to pay taxes to the government. Yes. Right? So on my EBIT, I will pay my taxes. So whatever is left after paying my taxes, that is my earning. Yes. So EBIT into 1 minus my tax rate. Okay. For example, suppose my EBITDA is 150. Yes. EBITDA. My depreciation and amortization is 50. So what is my EBIT? 150, and I deduct this 50. So this is my EBIT. Yes. Right? My tax rate is say 30%. So what is now left with me? This into 1 minus 30%. Okay. 70 rupees. This is what EBIT into 1 minus tax rate is. So this is now, this is the my earning. Earlier I deducted depreciation and amortization. Yes. So now I will add this back. I will add D&A, depreciation and amortization. Just one question. Yeah. Why are we always deducting the depreciation and amortization? I agree because we have invested in that asset. So yeah. Okay, that's why we are not deducting it and we are adding it back. Okay. So value. Okay, because it further going down the line, these will also add value. What happens is that, so, see, depreciation and amortization are a non-cash expenses. Yes. Right? So you get benefit of that. Yeah. So that's why that benefit I am trying to add this year. See, it will be a little difficult for you to understand this because like we have covered this in 2 years to understand what is free cash flow. Right. What is the earning potential of the company. And I am here trying to explain you in 2 hours. So will be a little difficult. Okay. No, but got the gist of it. Okay, because these see you have because you have invested, that's why you can take that benefit. That's why that benefit is again added back. Valuation. Right? Now to run the business, you need to invest back into business. Yes. You need to do some capital expenditure. Yes.
because business is a going concern. We are running this business for 100 years, more than 100 years.
Right.
So I will less any capex. What is capital expenditure?
Okay, now for how much time period you will?
This is yearly. This is yearly.
Okay.
This is for 1 year. For example, January to December, what is my EBIT into 1 minus tax rate? What is my depreciation and amortization? What is my normal capex?
Okay.
Sometimes it happens that every 5 years you have to do capex.
Yeah.
So I will normalize it. That okay, to stay in business on an average in a year, I need to do this much
Right.
thing, this much capex. Then only I'll be in business. Otherwise, I will be out of business. Then there are working capital requirement of the business.
Yes.
To run your business, you need working capital.
Right.
If you are using your cash, that means your working capital is being funded from your own pocket. So that will be less.
Right.
Because if I am suppose whatever 100 rupees I am earning, 50 rupees I am putting this as capital expenditure and 10 rupees as my working capital. So 60 rupees are gone. So what is my free cash flow that is left? 40 rupees.
Yes.
Right? So that's why it will be working capital. Now, whatever amount is available after all this, it is called as free cash flows to firm. Free cash flow to firm. Basically, this is the cash that business is generating after their day-to-day expenses, after their capital expenditure. Is there any other expenses left? No. In normal business. So this is the free cash that business is generating. I am interested as an investor in this free cash. What is the potential of business earning this cash? This is one method. Other way, to some people also use EBITDA directly. Depreciation is already added, less capex, and add or less working capital. People also use this, and then they arrive at free cash flows to firm. Proper scientific method is this, but sometimes people also use this method.
That
The only difference is this 1 minus tax rate on EBIT. That's it. That means if I see the difference is only of 30 rupees. Here we are taking 100 and then we are adding back 50. So it is 150. In this case, it is 70, 70 plus 50. In this case, it is EBIT into 1 minus tax rate plus depreciation and amortization. So 70 plus 50 is 120. In this case, it is 100 plus 50, which is 150. That's fine. Though there is deviation, but normally people also use that also.
okay.
So right now we will just stick to this. Don't worry about this thing.
Right.
Okay, so this is the free cash flow to firm. Now I will see this. See, we know that this business like Bajaj Auto, DMart, they will be running for years. So today, this particular year, March ending, is year 0 for them, because we are already in the month of February. In next 1 month, this year will be over.
Yes.
If we were in April, then the full 12-month cycle is there. So here it will be year 1. So right now, since already this year is over, March ending, so I'm keeping this as 0.
Okay.
Then next it will be 1 year. So basically now what I'm trying to do, I'm trying to see what is the free cash flow earning potential of the company
Monthly.
yearly.
Okay.
This is years. These are years.
Okay, in this many years, how much?
Exactly. So I'm deducting this. People can take this for 10 years also. Now I want this free cash flows to form.
Yeah.
Okay. Now let's see what is the FCFF for our companies. Let's look at DMart only right now. What is my EBIT? They have given in number of share per share. They have not given in total value per share. Forget it. Okay. Let's go to income statement, profit and loss. Okay, let's take these yearly results. What is my EBIT? Have they given here directly? No. See, we will take this as EBIT only. Okay. Profit and loss before interest and other items. So year 0, which is this is last year. Now we are almost like 11 month almost is over. Just still an example. I will take this as year 0 and the amount is 1447.64. So I am coming here as EBIT 1447.64 less my tax. What is the tax that I paid? 511. 511. Earning before. Sorry, we'll take this item. Sorry, we will take this item. 1494. We will also include interest. So 1494.79. 1494.79 less my tax, which is 511. What was it? 511.29
0.
minus 511.29. So now I have got this EBIT into 1 minus tax rate. This plus this. This is this amount. EBIT into 1 minus tax rate. Right? I am adding it. Depreciation and amortization. Let's see what is DNA for this company. They not mention DNA. Why? Expenditure, power, employee. Okay, yeah. Here is depreciation. See, 198.80. So I will add this back. I will less capex. Capex I will get it from cash flow statement. What is the capital expenditure? Cash flows yearly. Okay. So they have not given us breakup for this capital expenditure. What I am doing, I am taking this as capex.
Okay.
Cash from investing activities, capex comes in this. In our first lecture, we saw that.
Okay.
Please revise. Minus 1000. That means this is my capex. The free cash flow is negative for this company. How come? Let's see. and I will do add or less working capital. So change in working capital. This is my bad. This is change in working capital. Change in working capital. So whatever additional requirement is there, that working capital we will add. My bad. Okay, so it is EBIT into 1 minus tax rate. You add your depreciation and amortization. Whatever net capex you do, you will deduct, and whatever is the new addition in working capital, you will deduct that. If there is low working capital and you don't require, so you will add it back. Whatever is the change.
Why see till working capital was there, I understood. Now I'm not getting this point. Why
See, change in the sense your normal business can be run through whatever working capital you had right now.
Right.
Working capital is what? Your inventories, right? Your debtors and your payables, right? That will give you working capital.
Yes.
If your working capital increases, so you will have to add that into your business, no? So that will reduce your free cash flow.
No, but what was working capital was required, that will require even down the line. Let it be increase or decrease.
That is already considered. Whatever additional requirement is there, only that portion you need to bring right now.
Okay, I guess I'll need deeper understanding.
I'll explain you that. Yeah. So see, right now, whatever capex you did, your business is running.
Yeah.
Whatever additional capex you will do, you will add that only. Basically, you will deduct that only.
But next year also I will need that much amount, maybe less, maybe more. But that much amount I will need.
In working capital.
Yes.
Yes.
So even if there is no change.
See.
But I will need to remove that from my this thing, no free cash, no.
So see here.
Example.
I'll give you this example. I'll explain you. See, on an average, in your business, you are already assuming that this is the raw material you will require.
Yes.
This is there in your business. Yes. This will be your debtors, and this is your payables. Now, whatever free cash flows you are getting, it already takes into account these three figures. This, and this. If you require anything more than this amount, that provision you need to make, no? Because otherwise your business is running on all these three, right?
Right, it's running on this three.
So when I am valuing this company, whatever sales and everything EBITDA that I am getting when I have these investments, right? See, your business will be there only when you purchase raw materials.
Yes.
Only when you buy it from your creditors, I mean from your payables, from people who have you will supply you. Yes. And whenever you will sell, then only there will be sales.
Yes.
So your business is already considering this. Now, if there is any further requirement, any additional requirement in your working capital, that you will add. If tomorrow there is low requirement, right now what is the working capital of this company is equal to this plus this minus this, 1 lakh rupees. But tomorrow if company needs 2 lakh rupees, so 1 lakh rupees ka already I have built in this business. I need additional 1 lakh rupees.
Yes.
So that additional 1 lakh rupees I have to add it here. Okay. Basically, from my free cash flows, that will go down.
Okay.
Whatever I am earning, whatever is my free cash flows, from that I need to make extra provision of 1 lakh rupees for working capital. So from my free cash flows, that will get reduced.
Right, but मेरा कंसर्न वही है कि 1 ईयर में इतना हो रहा है,
या
तो इतना नेक्स्ट ईयर में भी होगा, इससे प्लस माइनस होगा, ठीक है,
हाँ
इतना तो होगा,
हाँ,
तो वो भी फिर नेक्स्ट ईयर के इसमें भी एडजस्ट, मतलब
नहीं तो
Value
in next year figure you can't adjust this 3 lakhs na, this 1 lakh again na.
if scenario remains same.
If scenario remains same,
Yes.
see, so your business assume that on an average you need 1 lakh rupees capital.
बरोबर.
With that you can run this working capital.
working
With that you can run this business.
right.
And because you are running this business, this is the free cash flow that you have got.
Okay. ठीक है, मतलब ये चलाने के लिए इतना ही ले रहे हैं, तो इतना अगर नेक्स्ट ईयर भी है तो वो तो अंदर पकड़ के ही चलना होगा कि
See,
इतना डालना है ऐसे.
Exactly. For example, suppose assume that you are keeping a savings account in any bank.
Right.
Right. Now to earn 3%, suppose you have invested 1 lakh rupees in savings account. Your target is 3% returns. So every year you will get 3% from savings bank because that is the current interest rate.
Yes.
Now, do you need any additional capital to earn 300 rupees or 3%?
No. Unless the interest rate.
Unless the interest rates move. But suppose now you desire, okay, I want to earn 6,000. So you need to put additional amount into that, additional 1 lakh rupees into your account.
Yes. Yeah.
Otherwise your business is running, you are getting
Yes.
yearly 3,000 rupees.
Yes.
The same thing is this.
Okay.
Your capex and your working capital is already there in the business, and that is allowing you to generate this kind of sales and this kind of numbers.
Okay.
Right, but you want to grow, right? We assume that whatever earnings or whatever free cash I will have, I will invest some into business, and I need to see what will be my growth.
Right.
Okay. So in this case, I don't think, again, your change in working capital is available in cash from operating activities. यहाँ पे they have not given us the breakup. Otherwise, we would have taken that. As of now, assuming this is zero, means with whatever working capital they have, they are fine. Let's look at free cash flows of the company. It is negative right now. It's EBIT plus my depreciation and amortization, deducting my capex and deducting my working capital. So this is my free cash flow. I know it is very less, but let's see. I guess because we don't have breakup of these investments, that is the reason we are not getting it. Let me look at the annual report and see. Not present. Let's look at 18 annual report. Not present.
Let's go to the side one.
Okay. This is the annual report, and let's go to the income statement on. This is shareholding. See, here is cash flow. Let's look at proceeds from disposal of property. This is not capex. Realization from FTs and IPO proceeds is not capex. Interest receipts, no. Purchase of property and plant. Oh, this is high. 1379.
So what moves to
1380. So here instead of this we will write as 1380, and see, this is my change in working capital. See, this is my operating profit before working capital, and this is my adjustments for working capital. This 321. So earlier my business required working capital of 240. Now my business requires working capital of 321. So that means out of 240, now the working capital has increased from 240 to 321. So I will give effect of that is equal to 240 minus 321. Means I need additional 81 crores. Yeah, 81 crores to run my business. Okay. Depreciation is 1998. Okay, what is the EBIT of the company? Profit before tax is 1447. So how come we got less profit in their tax? We got 1494, right? Less tax. This is the current tax of the company which we deducted. Okay. I guess because of this tax item, our FCFF is coming as negative. Now we need to understand what exactly is this gap. So are you understanding the difficulty of arriving at free cash flows?
yes.
This is like a real scenario what we are doing.
Yeah.
So if I was into any institution, I would have tried to do the same thing,
Definitely.
right? Let's look at this what it is. Let's look at this. Current tax on profits for the year recognized in this thing. Total current tax expense is this. So I guess that's the case. So right now, DMart has a free cash flow negative. Why? I guess because of the capex and the current tax. These two line items.
Tax rate I think little higher.
Very high. 30% के ऊपर I guess it is. Yeah, 34%, which is not normal. So what I would do is generally what we would do is we need to arrive at these normal numbers. Now, obviously, with this kind of free cash flows, it is not possible for DMart to run. And these are actual numbers. This is not that something, fictitious numbers we are using actual numbers. So that means either this tax amount or this capex, something has to reduce. Now, and I know that 34% is not the tax rate in India. It has to be 15%. 15% corporate tax, 15, 25, whatever, right now. See, generally they pay MAT or something. So it ranges from 15 to 20% or 25% max.
Okay.
So I will try to arrive at what is the normal tax rate for the company. So as an investor, I will go and ask the company that why your taxes are so high, and is this the real requirement, real capex of the business? This I need to understand.
They might be opening stores.
Exactly. So possible that this is not the average capex. One time capex, if it is there once in 5 years, once in 6 years. So what I will do, I will look at their historical data also, not only for 1 year, but last 4 5 years, and try to see what is the case. Similarly for capex also, I will do the same thing. Let's look at PPE where it is here. See this 1379 and 896. Almost 500 crores have there is an increase of 500 crores. So I will ask the management whether this 500 crores increase, what is the reason? And what is your average capex per year, once you are done with such huge capex?
Right.
So I need these two clarification from management.
Okay.
Suppose management say, okay, no, our real capex requirement is only 900 crores. This is just one time we had to do, we did that. So I will write here minus 900.
Okay. Right, then it turns positive.
Yeah. So then this is my free cash flows to firm. Basically, this is the cash available with the firm. I am interested in this cash.
Right.
Right? Again, with the tax rate of 34%, it is way too high. This is for retail investors, we have that tax rate. Let's look at companies' annual report and understand what is the tax rate for them. What is the tax rate? They have not given anywhere. No. See, these are all the breakup of your tax.
It is 35%.
See, this is what our calculation is.
This is their
30. Yeah, this is the rate, but what is normal tax rate? Because the US companies, they give properly that the corporate tax rate in US is 25%, but their taxes, the taxes they pay is different. But TK, it's not there. Forget.
No, but why they are having 34% tax rate annually?
See, it depends. Now I don't know what exactly is the case. We need to ask to management why the taxes are so high. But it's okay. Right now we know this concept that this is now free cash flows to firm.
So this includes only the income tax or also the GST that they are paying?
All the taxes.
Okay.
All the taxes that they are paying. GST is since last 1 year, so
Yeah, they are collecting it as
exactly. Now that's what we don't know how exactly they are calculated, but this is the normal figure I am interested.
Okay.
Now, what I will do is that I will do projections for the company for next 10 years, 5 years, 15 years, whatever it is available. But normally we do in a range of 5 to 10 years. Okay, so right now I am just doing it for say 5 years. Delete. So based on my model, based on my understanding, I will assume certain growth rate. We will see normally when we do this modeling, when we do this forecasting, see, this is this current year, March 2020. This is March 2021, 22, 23, 24, 25. Okay. So now what we do is we do complete forecasting. We derive the sales, the expenses, what are the EBITDA margins, what are EBIT margins, what is net income, and from that we arrive at free cash flows. This is how we do projections. Now, just to give you a brief idea, assume what are the sales driver for DMart. Means today if DMart ka sales is 19,916 crores. For next year, for this year, March 2020, what will be the sales? For 21, what will be the sales? So I know DMart is into business of retail, right? It is retail stores. So if higher the number of stores, more footfall, more people will go and shop. So I know the number of stores that they have, average number of people visiting DMart,
Yes.
and the average purchase value of each people.
The average number of, how can we decide that, or billing is number of billings?
Number of billings, exactly, they will have. To retail people probably they will not give, but to a institution they will give everything.
Okay.
That this is the total number of bills, separate bills, and from that you can arrive at what is the average bill size, what is my average bill size. So if company is increasing its stores, say right now, suppose they have 100 stores. Next year they say 120, next year they say 130, they say 140, and by next year they say 150 stores we will have.
Right.
Okay. This statement normally, people ask management that, by next 5 years, how many stores you will have,
Okay.
right? So suppose management says us that this is the number of stores we plan to target. Now I know what are the average number of people visiting.
Yes.
Suppose 100 people are visiting stores in a year, in one store. So 100 into 100. So this many people are visiting. I am assuming
100 number of people only with 150.
150. So this many people will visit DMart.
Right.
Okay. Average bill size is say 1000.
Yes.
Okay. Average bill size.
But it's not a whole guide.
Minimum on an average.
Yeah.
Plus minus something. This into this. And I assume that average bill size will remain same. Okay. So this is my sales amount for DMart.
Yes.
Whatever is the amount, 10 lakhs, 12 lakhs, 13 lakhs, 14 lakhs, 15 lakhs, whatever. These lakhs mean crore. 1 crore to 1.5 crores. So this is my sales. So these are the drivers of the company, sales drivers of the company. How you arrive at sales? If suppose I tell you, okay, the sales of DMart is going to increase by 50% in next 5 years. Then you will ask me, what is your assumption? So sir, this is my assumption. Since DMart has 100 stores right now, and by the end of 5th year, they will have 150 stores.
Right.
And this is the average number of people, this is the average bill size. Hence, I assume that sales will be this much.
Right.
Right? Similarly, I will do it for cost. I will do this for cost.
To arrive at
what is my
capital.
Exactly, what is my EBITDA?
Yeah,
Now, suppose cost right now is, I'm just assuming things. I'm directly taking this total expense.
Right.
Just to make it very simple. 18,520, and I am adding back my finance and depreciation thing. Okay, just a second, give me this thing. 19,916 is my sales. 19,916 is my sales. I'm not considering other income right now. Okay, my total expense is 18,520 minus 18,520. I am adding back my finance cost and depreciation, which is 198 and 47 plus 198 plus 47. I want to arrive at my EBIT figure, EBITDA figures. So, what is this percentage? This divided by this. 92. That means now whatever amount is left, that is my EBITDA margin. So 91.76% is my cost. Okay. So I assume this will be my cost for next 5 years. Assuming same.
Okay.
I'm assuming.
Okay.
If I have better information, then I will do this costing year by year,
right,
line by line item. But I am assuming right now. Okay. This into sales. So this will be my cost. This is my cost. What happened? Okay. E140. I'll fix this. So this is my cost.
Right.
Now I have this EBITDA over here is equal to this minus this. This is my EBITDA. What is my EBITDA margin? Is equal to this plus, sorry, divided by sales. 8%. Okay, this is my EBITDA margin, right? So right now in my model, I am not using any growth, but definitely company will grow. Margins are expected to grow. Whenever you speak to margin, whenever you see industry, you know what are the margins in the industry and what kind of growth you can expect. So accordingly your EBITDA will change, your margins will change, right? Now what is there? Depreciation and amortization. Obviously I am increasing my stores every year,
Right.
so I will need this capex. On an average, I know for opening one store I need say 10 crores. Example.
Right.
So for opening, suppose today this is year one, right? Today we are at 90 stores. So I am increasing 10 stores. So if one store is costing me 10 crores, so now I am increasing to 100. From 90, I am increasing to 100. So I am adding 10 stores. One store costs 10, so 10 stores will cost 100 crores. So in my capex, there will be 100 crores
Right.
addition,
Yeah.
right? Accordingly, my capex will increase. Here I am opening 20 stores, so 200 crores. I am opening 10 stores additional, so 100 crores will increase
100 crores every year.
every year. 100, then 100, then 100.
It will be fixed.
It will be fixed.
Yes.
Accordingly, my depreciation amount will change.
It will keep on increasing.
Keep on increasing.
Because of the existing stores.
Yes. What is my depreciation right now? 198. Okay.
Right.
And what we assumed from 198, I will add 100 crores here as my capex.
Right.
My capex increase was 100.
100.
Depreciation is say 10%.
Okay.
Okay.
So 10 crores.
Into 10%. Getting me? 198 is my current year depreciation.
Plus 10.
My
Yeah, I got it.
Got it? My additional capex is 100 crores, and on that I am charging 10% depreciation. So this is my new depreciation.
Yes.
I will do this same thing. Is equal to this plus here I am increasing 20, so it will be 200 crores into 10%.
Right.
From 100 I have gone to 20.
Right.
Okay. So now it is 228.
Yes.
Okay. Here it will be, I am increasing by 10 crores. This
Right.
plus 100 into 10%. So this is my depreciation amount.
Right.
If I deduct this, I get EBIT. Is just giving an example. Don't go on guessing. This minus this will give me EBIT.
Right.
This is my EBIT. Right? So after that, I'll have interest expense.
Yes.
Obviously, management always tells, whether they will repay their debt, whether they will take new debt from the market. All this is available to the analyst. They ask the people what will be the cost. Based on that, this number will come.
Yes.
So what is my interest expense? 47 crores. This is my interest expense. 47 crores, right? This is my interest expense. I assume this will stay constant. I got my EBT.
Yes.
Is equal to this minus this, right? I have my taxes, some 500 crores I paid. I assume this will be same every year.
Okay.
Now I have my profit after tax, which is this minus my this, right? So now what we can do, we can, make this real number. 19,900 crores, right?
Yes.
Here it is 19,916 crores. I am giving a growth of say 10% on that. Just giving any rough 10% growth. Same cheese, same thing I am doing it here. So every year my sales is going up by 10%. Whatever assumptions we took, this is just a rough. So see, what is my current profit after tax?
980 something.
Total comprehensive income, no, profit after tax is 936.
Okay.
Okay, so here it is 936. From 936, my profit after tax is going to go up to double. This is my assumption. Huh? So
Okay,
according
this scenario plays out.
exactly. So this is how I will do the forecasting.
Okay.
Right? Accordingly, this is my EBIT. I will fix all my figures over here. Let's try and do that. Is equal to EBIT. Okay, I'm filling everything. EBIT less my taxes. Taxes is 500. What is my EBIT into tax rate? This plus this, right? Okay. What is my depreciation and amortization? This amount. Okay. What is my capex requirement? Assuming, I'm just assuming this, huh? There is no hard and fast rule. We'll keep this constant.
We can keep this increasing.
We can keep this increase depending on what kind of. So, but this I'm just giving an example how we arrive
Let's
at.
increase this also. Just at least by 5%.
Okay. Since Jay is saying we will increase by 5%.
Like some fixed costs like staff salary, electricity, transport.
Okay, so we have increased this by 5%. Working capital, I will keep it constant. There is no, we'll keep this constant only. Yeah, there is no change or let's see what is free cash flows to form. So this is my free cash flow to form for DMart. Just an example.
Right. Tripling.
Right? I'll ask Vidhi. Vidhi, so far clear? Oh, okay. Vidhi, is it clear? Any doubt you have right now? Yeah, ask what doubt you have.
Go with
Now, after EBITDA increasing, tax will also, yeah. It will increase, but in our model right now, I've just kept it constant. Just to give you an example. This is just an example what I am trying to show you. Obviously, your taxes will also increase. If you want me to do that, let me do that. Chalo, I will do this. Is equal to this into, I'll give proportion of this divided by this. I am keeping this constant. Okay. So whatever is my tax rate, what is my tax rate? Now I'll have to take this particular year. My tax is 500 and my EBT is 1447. My tax is 500 and my EBT is 1447 for current year. So this is my tax rate. Okay, I'll take the same tax rate. 34 is equal to this into this. I'm keeping this constant. Okay. Now fine. Your tax rates are also increasing. Fine, Vidhi. So I have assumed in my model increasing tax rates also. Okay. So now let's look at our free cash flows to form. So this is my cash generating capacity of the business. Almost triple, whatever. Right? Now this business will run for years. We can't value something for years. At some model, we need to assume, okay, after these cash flows will be constant because business always has cycle. Some companies are at the growth stage, then they reach mature stage, right? So what happens in growth stage, the growth of the company is quite fast as compared to industry, as compared to its historical period. In mature stage, the growth is very low, very slow. So now I assume in next 5 years or 10 years, we will not focus beyond that. Demand will first grow at a faster rate. After that, growth will be slow. We assume that growth will be very slow for lifelong. Right. That's the assumption we generally try to do. Right. Okay. We will come to that valuation sometime later because that requires some formula and you will get confused in that formula. So we will not go into that. Okay. But this free cash flows, how we forecasting is fine. Yes. Okay. Now we need to see what is the value of this free cash flows. See, this free cash flows you will be generating after years. But you need to see what is the present value, what is the value today. Just giving an example, suppose you have 100 rupees right now in your pocket. Right. Okay. You go to bank says we will give you 10% interest after 1 year. If you deposit this 100 rupees with us, we will pay you 10% per annum. So that's why after end of 10 year, what will be my money? 10 into 100 into now 1 you take out plus 10 or you don't take out that 10 two scenarios. Just a sec. No, my money will grow from 100 rupees to 110 in 1 year. Right. If I am earning 10% 2 years, so what will be then growth? Raised to the power 2 means my 110 will become 121. We'll show you how. This is 100. This you are gaining 10%. Yes. By year 1. I got it. Just for the sake of
Yeah.
simplicity, I'm doing this. So your 100 rupees has become 1 plus this at the end of 1 year.
Right.
At the end of second year, now again this 110 will be invested now,
Right.
right? So it has become 121. Now third year again 121 is invested and 133. So and so on and so forth.
Yes.
Simple. Assume this is the same thing. This is the returns from bank which you are getting if you invest at 10%.
Right.
What is your yearly returns you are getting?
10%.
10%. So your cash flows is 100, 110, 121, 133, 146 and 161.
Right.
Perfect. Now we started with 100 rupees. Now assume this is not bank. This is stock.
Right.
This is cash flow from the stock. So if you want 10% return, so your cash flow should increase by this amount. Replace these numbers with these numbers. So before investing in a stock, you will try to see now what is the value I should earn from the stock market.
Right.
Then only you will invest.
Yes.
So we bring all this to the present value.
Okay.
Suppose you say you want to earn 10% every year. So right now you are standing here.
Yes.
Right now you are standing in this particular year. So this 201 is the right now value of your business, the free cash flows. So this 201 will be 201.
Right.
Now this 324 is you are earning after 1 year. So you will have to bring it to present value for 1 year. For example, this will be 324. Suppose your rate of investment expectation is 10%. 1 plus 10% raised to the power 1. Why 1? Because you are taking, this is the first year. This is the present value of your amount here. Means 294 is the present value.
Okay. At today's value.
At today's value. So basically, if I invest 294.98 for 1 year, for 10 at the rate of 10%, I will get 324. Similarly, this year it will be 2 because this you are earning after 2 years, right? This will be 3. So I will link this to years. Okay.
Right.
So every year your business is earning you this much. So the present value of this amount is 201 because this is the amount you are earning right now. After 1 year you will be earning this much, but present value of that amount is this. Similarly for this year. So what you will do now addition of all. Means for 5 years your business has potential to earn this. For 5 years your business has potential to earn this. But we assume business will run for lifelong, it will never end. So here there is a method, no need to go into that detail, but I'll just, for the sake of our valuation, I will use this. It is equal to free cash flows into my 1 plus growth rate. Growth rate means what is the rate at which my business is growing. I am assuming 5%, because after a certain point of time,
This is after 5 years.
after 5 years, and now I am taking perpetual value of the business.
Okay.
Okay, no need to go into that detail right now. This divided by my WACC. WACC is your expected cost of returns. Here we have assumed 10% everywhere.
Okay.
So I am taking that 10% minus my growth rate. Okay. So this and this. So this is the perpetual value of my business at the end of 5th year. Means lifelong my business will earn this much amount. I will again write this in formula over here. What is my perpetual value? Is equal to free cash flows to firm multiply by 1 plus my growth rate. Okay. Now this will be divided by my WACC, weighted average. I'll come to WACC also, cost of capital, or 10% what we have assumed right now, minus my growth rate. So this will give me my perpetual value. Let's remove this is equal to. Okay. So this is the perpetual value at the end of 5th year. So I need to bring this to again this particular year, the present value. So I will do the same thing. Is equal to this divided by.
This is that 8,000 is for the next 5 years, right?
For lifelong.
Oh, from 5th year to
infinity. This is what we assume. Okay. This divided by 1 plus growth rate raised to the power n. So this is the present value of my perpetual growth rate. This is for this amount is for first 5 years, and this amount is for perpetual. So this is the net capacity, the net free cash flows to firm of the DMart. I know it's going little bouncer, but just understand the calculation right now how I am doing. If you revise this 2 or 3 times, you will understand, what exactly it is.
That was also great, but थोड़ा अभी मतलब imagination के बाहर जा रहा है.
That's fine. That's fine. Just figure on, how I have done the projections. A, what did I look at the projections? How I arrived at the free cash flows, and I am bringing this free cash flow to the present value. Don't worry about this perpetual growth rate right now. You need to do proper for that. Exactly. So this is my net present value of business. Now this divided by number of shares. This divided by number of shares will give me equity value. Suppose, yeah, this will give me equity value. Equity value. Let's take what are the outstanding shares of DMart. Okay, this all is in crores. Huh? This is in crores.
And come already, lifetime.
Let's see. क्या है? Let's see what is the outstanding shares. Outstanding shares, equity share capital is 624. Number of shares. See this number of shares. 624084, whatever is the number of shares. 624 crore. You need tens, 100,000, 10 lakh, 10 lakh crore. 6.2 crore is the outstanding shares. See.
Okay, that is rupees.
See, this is rupees. This is number of shares. Yeah. So basically, this is 62 crores, I guess. Yeah. You need
62.
tens, 100,000, 10 lakh, 10 lakh crore, 10 crore, 62 crores. So I will copy this and I will paste this in here. I will convert this into crores. It was 62.4 crores, right?
Yes.
So equity value or the market value of DMart is 121, which is good. Obviously our growth assumptions and all that will also matter.
Okay, we have taken very conservative.
Very conservative. So our price has to be somewhere close to 2000 rupees. And current market price is, what is the current market price?
Some 2300 something.
23 to 23. 23, 23. So now you can assume that you know what kind of conservative growth rate we have taken. Somewhere we'll have to increase our free cash flows or at least our EBIT. But overall, did you understood how exactly we go through valuation?
Yes.
Right? No, this we discussed.
This is intrinsic.
Intrinsic value. We arrived at. We did this method. Free cash flows to equity now. This is one and the same. Little bit different is that we add debt to it. I would not try to teach you this right now, otherwise you will get confused in both. Assume only free cash flows to firm right now.
Okay.
If you understand free cash flows to firm, it's more on sync.
Okay.
Right? So I am not covering free cash flows to equity right now, but probably after some time or someday I will record a short video on this thing and I will send it across to you guys. Yeah. But right now it will be too confusing. Okay, now determining weighted average cost of capital. The method what I use here, this WACC. Now let us determine what is this WACC. What is this WACC? And what is this WACC? So basically this 10% what we decided, this 10%, this is the cost of capital we assumed.
Okay. 10% interest.
Basically your expected rate of return. Okay. Now let's go below. What is WACC? Weighted average cost of capital. Yeah. Vijay, you have any doubt right now? Let's see. Okay. So In your company, you have two things, equity and debt, right? So debt we all know. What will be the cost of capital? You have to find out what will be the cost of equity and what is the cost of debt. So what is cost of debt? The interest you pay, right? And the total loan amount. If I divide this, if my total loan amount is 100 and the interest I am paying is 10, so my cost of debt is 10 divided by 100. My cost of debt is 10%, right? But when we pay interest, we get income tax benefit. As a cost we are removing, so we are getting this benefit of interest on that. So ideally, your cost of interest is not 10%, but less than that. Right? Yeah. It has two components, equity and debt. We are considering debt right now. How I arrive at cost of what is my interest amount and what is the total borrowings. I assume my interest was 10, my total borrowings is 100. But on interest, since I am getting tax benefit, I am paying taxes after deducting my interest. So I am getting that benefit, hence my cost of debt is low. That's why my new cost of debt, which is post tax, is 6.54%. Right? Now this is cost of debt. Now we will arrive at cost of equity. Cost of equity. Now there is one method called as CAPM, Capital Asset Pricing Model. So what they say, we can arrive at cost of equity through following methods. Just assume one thing. In India, government take loan from other countries or from some people, institutions. They pay interest. Now that interest is completely risk free because government will never default. So that amount is called risk-free rate. Suppose government of India is taking loan from Jay and they are ready to give 7% interest to Jay. And if Manish is asking Jay, give me loan at 5%, will Jay do that? Reason being A, with Manish, there is a chance that Manish might default. But with government, will they default? No. So what capital asset pricing model says, the minimum expectations from investor would be at least risk-free rate. Right? This is the minimum amount you will need. Now, Government of India is taking loan at 7%. Bank fixed deposits are available at 8 or 9%. Right? Corporate bonds are available at 10%. Forget that. You can invest in Nifty index mutual fund. Index fund for India, Nifty is the index. Means Nifty is the benchmark for India.
Right.
Okay. So you will then why invest in DMART? There is more company specific risk.
Yes.
What all options you have? Government, banks, corporate bonds,
Index fund.
index, and then company DMART. Right now we are looking at DMART. So highest risk is in company DMART.
Right.
Right? Government is paying you 7%, banks 8%, corporate bonds 10%, index. So what we will do, index we will try to find out what is the index return for last 1 year. Annual returns they don't have. You don't have annual returns for this.
Money control is there.
So okay, so basically what I will do, let's look at Nifty. Just a sec. Nifty 50.
It's your YTD minus 7.94.
Yeah, for 1 year it has given me 7.6% returns. But obviously this year because of this last 7 days fall, last 7 days or 8 days it has fallen by 9%,
Yes.
and still it has been able to give 7% returns. So 7 plus 9, roughly about 16% returns on an average.
Yeah.
Nifty will give you 16% on an average, 16 to 18%. The other method to find is take 1 year price, take current price, take 1 year ka price and divide the returns. You will get it. But obviously now because of this last 7 days, your returns will be very way off. But on an average, your index is giving 16% returns. If Jai is investing in DMART, so obviously your expectation will be more than 16%.
Definitely.
Because index can diversify your risk to 50 companies. Still you are getting 16%. So from DMART your expectation is higher because there is more risk.
Definitely.
Right? Now I need to identify what is the extra risk I am taking by investing in DMART compared to Nifty.
Right.
Okay. So that risk is called as beta. One component is risk-free rate. Now, if I say it means if Nifty moves by 1%, if Nifty moves by 1%, your company will move 1.2 times of that is equal to 1.2 times of Nifty. Okay, if Nifty goes up by 2%, then this will go up 2.4%. If Nifty goes down by 1%, this company will go down by 2%.
Right.
1.2%. So I need to identify this beta of the company.
Okay.
Through Excel, we can do that. I will not show you right now because then we will go into stats and all that stuff. We'll get more confused. Just assume right now there is beta something called that beta measures the risk of the company. Right? So if you look at this, we are determining cost of capital, cost of capital things component and debt as a component. I have not taken here, but that is what post-tax interest divided by your total borrowings will give you post-tax debt cost.
Right,
We saw that. Now we are arriving at cost of equity. So cost of equity is what? Minimum what you want is risk-free rate.
Right.
Plus beta into market risk premium.
Okay.
Right? Whatever is the premium that you want. So in simple terms, if Nifty has given you 16% returns, you want at least 19% returns. I'm just explaining in very simple language. When you actually do, and when there are other components as well, which I'm not taking right now, but minimum this is your expectation
demand.
from demand. If beta, oh sorry, this is beta, right?
Yeah.
So we will add risk-free rate to that. My risk-free rate is 7%.
Right.
My beta is 1.2.
Yes.
1.2 of my index. I'm taking it right now.
Okay. Yes, you have to
Add it, yeah. There is market risk premium also. Don't go into that right now. Okay. So basically, minimum what you want is risk-free rate
plus beta.
plus the beta.
That is 8.2.
1.2 into your index returns. What was your index returns?
16.
16. You want at least 1.2 of that.
Right, that is 19.
19.2. So plus risk free. So the actual cost of equity is risk free rate plus my 19.2%.
Okay.
So this is the minimum expected returns or cost of equity. I'm not taking this concept of market risk premium. Will get little confused. So that's why let's keep it very simple right now. Okay. So this is my cost of equity.
Right.
Okay. Got it? Yeah. Now let's look at what is WACC of DMart. Cost. So let's look at what is the debt amount it has and what is the equity amount it has. Okay, let's go here.
Equity is 624.
Yeah. So total equity is 5594. See, this is your share capital. But we have others also. No? So this is the total equity. Okay.
You can just reconnect.
Yeah, sure.
Surplus around.
Yeah. See, this is securities premium, and these are other retained earnings and debenture reserve. I don't know what exactly are these two, but retained earnings are coming here. This can also be called as reserves and surplus. Okay. So the equity that DMart has is 5594. Okay. 5594. Debt it had was 198 crores, right?
Yeah.
We had seen somewhere debt.
Short term plus.
Short term plus 198. It was 198. Forget it. Check. 125.67. Okay, no, it was more than that. is equal
It was below only.
125.67 plus my current liabilities where I have borrowings which is 299.15. 299.15. So this is my total debt. My cost of debt, what was my interest amount? My interest is 47.15. 47.15. So this is my interest amount into 1 minus my tax rate. This was my tax rate, that divided by my total body demand. Cost of equity, let's assume this is cost of equity. Okay,
Yeah.
got it? So now we will arrive at WACC.
This is the return we are expecting, na?
This is cost of equity.
Okay, we remove that. Cost of equity we
See,
remove
this
right
is
now.
cost of equity.
Right.
But
Risk-free return.
company has also debt, na?
Yes.
With certain portion. So obviously now company has debt, so your returns will come down. Right? So what is WACC? WACC is, what is my cost of debt? 7.26.
Right.
Now I will do weighted average.
Okay.
Because I have two capital. One is 424 from debt and 5594 from this. So I need to give weightage to debt and equity both. So what is,
the amounts are not similar, no?
no, that's why I will give weightage. Na? See,
it's
what
two
is
varying.
what is total capital? Total capital?
Equity minus debt.
No, this is equity plus debt. Total capital is equity plus my debt.
Okay, right.
Okay.
Well,
Now debt is what percentage? This divided by 6018. Debt is 7%.
right.
And equity is 93%. So this is the weight. In the total capital, what are we finding here? Weighted average cost of capital. So this is capital. So obviously this has to do with this capital.
Yes.
We are doing weighted average. So we will do weights of debt and weights of equity. So what is my cost of equity? 26.2. What is my weight of equity? 92.94. In capital, equity has 92% weight. Right? Plus, what is my cost of debt? 7.26. And what is my weight of debt? 0.06. This is my cost of capital. Weighted average cost of capital.
So this is
Yeah.
return versus weight.
So the free cash flows to firm that we arrive, where it is free cash flows to firm here. Here we assume 10% as my cost of capital. So this cost of capital is not 10%, but it is 25%.
Okay.
An example.
Yeah, because on equity also you are going to expect some return because you are investing. निकलना चाहिए.
Yeah.
Cash flow आना चाहिए.
Yeah.
So, वरना business ही नहीं करते. अगर इससे काम होता है.
Exactly. So this is your WACC. This is how you do valuation of any company. And when you do this valuation, right, this equity value or market value, what you get, this is what you target. So you see what is the equity value that you are getting and what is the current market price. For example, suppose if when you run this model, you get equity value of say 2800. Right now, what is the current market price? 2323. Okay, so what is the return that you are getting? Divided by this minus 1. 21% return. So according to you, this stock is undervalued. And if you invest in this stock, the returns that you can expect is 20%. Suppose. Suppose through this model, you are getting value of 2000. So now your assumption is this stock is overvalued. The fair value of the stock is 2000 rupees.
Right.
This is how you arrive at fair value. This is what is called intrinsic value of the stock. What we did is discounted cash flow. This is the cash flow of the company,
Right.
free cash flows. We discounted these cash flows to present value and then we arrived at the market price of the stock. See, obviously, this is a subject which nearly takes almost a year to understand. Covering that in one lecture in 3 hour session is difficult. So, the idea behind this is that, whenever you try to hear all these words, you don't get confused and you understand what is the implication. I know it will be difficult for you guys to remember everything. What I will do, I should have some notes on all these things. I will share with you so that you can go through it in detail and understand what exactly is that. Because right now I have just covered 10% of what is actually there.
Right.
If we try to cover everything in detail, then we need 6 months.
No, but
Yeah,
if you want to make a strategy on this,
yeah.
so these figures we have to extrapolate on the basis of.
See, exactly. You can't make a strategy on this thing because you everything. Then you need a lot of assumptions.
Yeah.
What you can try to do is that if some company or from some paid vendor you are getting these data, then you can compare whether the company is undervalued or overvalued directly.
Okay.
But this is very difficult to find because at max what you can get is free cash flows to firm. Now each institution will have separate method of forecasting. They will have different assumptions for forecasting. But overall, this is the overall process. So in valuation techniques, there are two types of valuation method. One was relative valuation, the other is intrinsic value. So in relative valuation, how we arrive, for example, right now EV by EBITDA for DMart was 54.
Right.
Now I say 54 is way too high. I will wait for 40.
Right.
My EPS or my EBITDA per share was 27 rupees.
Yes.
Right? So I will wait for 27 into I am ready to pay 40 times multiple. I will wait for 1080. Just an example, but this is how you do comparison. So relative valuation is little easier as compared to intrinsic valuation. Because in intrinsic valuation, you start from your revenue drivers, you go to your cost drivers, you arrive at the free cash flows of the company, then you find out what is the weighted average cost of capital. You discount that to present value. When you discount that to present value, after that you get price per share. And then you compare whether company is undervalued or overvalued. So this is all about fundamentals. And here we end the topic. So Vidhi, you have any query on this thing, on intrinsic valuation? Jay, you have? No? Okay. So there was one small topic which I wanted to cover myself, which was on what all data we can get from NSE or what all reports we get from NSE website, right? A very important data analytics thing which you need to incorporate, if you do that, definitely this will help you in making your decisions better. For example, if I go to products and if I go to say equities, now let us see, because the layout has changed a bit. Even I am not sure whether how they report right now in equities. Okay, no, short selling. In equities, again I will show in products. If I go to equities, I am in equities. I go to current market reports. I go to view all end of the day reports. Okay, now let's start. Closeout prices, not interested. Settlement statistics, not interested. No price band, margin, no. Short selling. This is what I am say interested. So if you see, no records. Generally, it says in which stocks there are short selling, but this is not given, every day. So this data is a little old data. Basically, this data is updated. Say, you will get 1 week ka data, not daily data. So if you have this information, sometimes, in this case, you will get some company's name. So it will tell you, for example, Reliance. That means there is short selling happening in Reliance. Means someone is bearish on Reliance. Obviously, you need to confirm this with all other things. This is not a trading indicator, but this will generally give you the information. Okay. Right? The other method is bulk deal and block deals. If I click at block deals, so you can see that there is block deal done in all these stocks. In these stocks. Okay. At this particular price. So if I see United Spirits, there was block deal done at 693 price. Sometimes these block deals give you good information. Like if more people are interested, and if we also look at client name, and if some renowned client name is doing block deal on this thing, then you confirm with the charts and data, then you can get some information. Okay. But you need to track this daily. Then only you can make something out of it. Otherwise not. After block deals, I have these bulk deals. This is really good information. Okay. So what is difference between bulk and block? See, block deals is like between two parties, and generally block deals are institutional deals. We generally don't, there is some timing ka difference also. I don't have proper bifurcation of what is the difference, but there is some timing ka difference. Okay. We are more interested in bulk deals. Okay. Means whatever, I guess more than 1% of the stake or something, if anyone buys in any company, then they have to disclose that as bulk deal. Okay. That's the case. Okay. And in block deal, there are two institutions doing that. Kind of that difference, but it will tell you that that major activity is happening there. Okay. Now this is bulk deal report. Let's look at all the companies right now. Okay. Data filter. I am filtering this by company by company. Adani Gas. Adani Gas total holding SAS has bought this many shares
But
on 28th of February.
one more doubt,
Yeah.
now since only one row filtered out,
Hmm.
like we saw in block T, two rows were there. One was for buying, one was
Yeah.
for selling, and quantity and price was matching.
Exactly. So in this case, not sure whether from whom they have bought. It could be that they have bought with bought from two players.
Okay.
For them, it might not be bulk deal, but
Okay.
for a total holding SAS, it's a bulk deal.
So it is pre-decided they are going to buy, and then they do it on exchange like that.
Yeah, exactly. So they have these people,
Okay.
traders. I mean, all these big houses like Citi, Morgan Stanley, Goldman. They have this bulk deal clearing desk.
Okay.
They help these traders or these companies or institutions to trade bulk quantities.
Okay.
They don't. These quantities will not come in the normal market. This happens to bulk dealing.
So it's on the exchange only.
Yeah, it's on the exchange from the NSE website only. I took, right?
Yes.
From the NSE website, go to bulk deals.
No, but since you told it will check. Suppose now somebody is placing an order to buy, and between some small guy places also order to buy. So
No, this is done through the bulk dealing team, not for the retail guys.
pre-decided price is agreed upon. And
Exactly.
plan.
So now this guy has bought.
This happens at market price or which price?
Depends at what price they are
But
interested.
it will happen in somewhere around what?
This happens before 10 a.m. I'm not sure. I had information, but right now I don't recollect that. Actually, this session I was not planning, but just thought now we have covered our fundamental. We have some time, so I will cover this also. This is generally reports which I also look at. So Adani Gas, someone is interested. Let's look at other big name. I'm not interested in smaller names. India Bulls Housing Finance. This Tower Research series. Now, Tower Research Company, one arm has bought and the other arm has sold. So this is called a speculative transaction. One arm is buying and another arm is selling. Or the same person is buying and same person is selling. Look at the buy quantity. Look at the buy quantity and look at the buy price. Look at the sell quantity and look at the sell price.
Right.
Hardly 1 rupee difference. Not even one. What is the difference?
10, 8 paisa.
8 paisa. 8 paisa into this. What is the amount? 1,96,419 rupees. That was the profit for this guy. But this guy has just, he came and he went.
Right.
Okay. So this is how you get. So basically, in India Bulls Housing Finance, there was a speculative activity which was done.
Right.
So if I look at India Bulls Housing Finance, let's let's go to investing.com. Let's go to the charts. This is not I want. Let's go to charts. Let's add volume. Generally, we try to see this. Now this guy bought this at 294.69. And what is the shares? 2 lakh
25 lakhs.
25 lakhs shares. And here what is the volume? 254 million, I guess. Yeah. So basically 10% volume has been done by this guy.
Okay.
So basically this is a big deal then. So 10% volume only one guy has done. And that too he bought and he sold. So this is a kind of a speculative move he has done.
He might be holding and he might only have...
He is holding right now only this many shares. He sold this many and he bought this many.
Timing.
So he is still holding 52,000 shares with him right now. Timing नहीं है इसमें.
कि पहले सेल किया
Yeah.
फिर बाय किया फिर बाय किया.
Yeah. Okay.
वो भी हो सकता है ना. वो ऑर्डर बराबर नहीं है ना बाय सेल.
हाँ वो नहीं है. Let's look at which other companies I am interested. United Spirits. Let's see United Spirits. Okay. Now I don't know which
This
is
is
this
income tax.
recovery officer.
Debt recovery tribunal.
Okay.
DRT.
So why they have sold?
वो पैसा वो मालिया का.
Okay. So this is how you can see what is happening. Sometimes what happens, for some companies you will get a good list of buying that all mutual funds are buying. Like it will happen. Yeah, yeah. In this list, let us look at all the companies then. Let me look at all the companies and let's see. Goldiam, Tower, to Fidelity Investments. Now let me look at Repco Home Finance. See, Fidelity has bought and Birla has sold. So sometimes you in this also you get good information. Like for some companies, I remember in some month in Wheel. Wheel is a company, WHEEL.
Okay.
The Wheel powder.
Mm.
In that, if I remember, at least 5 or 6 mutual funds had invested the same day.
Oh.
Yeah. And after that, Sky rocketed like anything. I mean, the price.
You didn't get second day.
No, I got. But that's the main motto of going through this particular thing.
You can say the Shriram Transport also because some institution only.
Just a sec, huh? I am just saying if there is
BlackRock.
any where is BlackRock and Shriram Transport. Let's see this. Let's see. Shriram Transport. They have sold actually.
Right.
And these people have bought. So not, I mean, there are no major.
That is also institution, right?
Yeah, that is there. But we will obviously renounce. So if I track this and if I see that HDFCs and Birlas and Fidelities and all these mutual funds are buying some stock, that means institution is bullish on that stock.
Okay.
So kind of gives an idea that probably this stock will run.
You are facing one name as Washington University also.
Possible.
That
So not necessary that you get something good, but it is always good to have a look at this data. Sometimes you can get good gem at good price.
Okay.
And we know these institutes, they buy for a long term. They will not buy for 1 day, 2 day.
Right.
So really, and they will look for good returns.
But at one case I remember in CI Tires.
Yeah.
It had happened we at 1400 or 1200 something, one institution sold and another institution bought. After that, stock rallied up to 1800.
Okay.
Now I don't know after that institution.
But yeah, that is generally if all this see, if generally in market where retails are very small fish and big fish, the sharks are these DIIs and FIIs.
Right.
If you follow them properly, then there are chances that you will get good returns. But it depends. Sometimes you are stuck also. I'm not telling that, I'm not advising here that you look at this and you go and buy. But from here you can know what is happening in the market, in which company who is interested.
Right.
Right? Daily volatility will tell you the daily volatility of each stock. List of securities, security wise delivery position. I don't know. This Bhav copy is fine. This is fine. Let's look at this. What is this? Okay, this is I can't translate. Forget it. Okay. Now let's look here. This will give you information on what FIA and FPI did on that day. This is only on the cash market.
Okay.
There is another market on derivatives as well. Monthly reports, daily reports is fine. Daily reports is also same. Security wise position I want to see. Okay. Now if I go to indices, let's see if there is anything in indices. Nothing. I'll go to equity derivatives. See, this is the total turnover that happened on that day. So in index futures, this was the number of contracts, this was the turnover. And all this information you get from equity derivatives. If I go into current derivatives, current reports and view all, this is pretty interesting. Okay. So here you will get the information on ban, which security is on ban or whatever. Participant wise trading volumes. This is important. Just a sec. Basically, what each entity did. So there are these 4 types of entities. Client. This can be retail clients and other clients. This is DII. This is FII. And this is proprietary desk. Other than all this will come as clients.
Okay.
Okay. This could be retail, HNI clients, whatever. Okay, so what did DIA do? Let's first look at FIA because they are the big fish in the market. They longed 93,479 contracts.
Right.
This is in index. This is both Nifty and Bank Nifty. Okay.
Okay.
This index includes both Nifty and Bank Nifty. Let's look at the net future position. This is the buy and this is the sell. This is the net. Just a second. FIA. Yeah. This is net future position. Okay. Now if I do copy paste this for all, so clients have bought 8,781 contracts. DIA has bought 6,000 contracts. FIA has sold and proprietary desk has bought. So if I look at yesterday's data, FIA is big negative because they have shorted 20,000 contracts yesterday.
Right.
And these are not intraday. Huh? This is volume. Okay, this includes intraday as well, I guess. Yeah.
Okay, so the net selling.
Yeah. So client FIA was bearish. Okay. Now let's look at the stock position. FIA has bought in stocks.
This is cash market. No, this is futures.
Futures market. This
so
is
which stock we don't know.
Stock we don't know, but in stocks they are buying, and in index they are selling. Now
Right.
you know this kind of information none of the TV people will give you.
Okay.
Okay. So this analysis you need to do yourself. That what exactly they are doing. Right. So and you can get from the NSE website and with the contracts. Now let's see in call what they are doing. Okay, let's see in call what they are doing. Net future position index, this is index. Okay, this is stock. This analysis is very important, you can't miss this. This is net position, net call position, net call position. So this is called long and this is called short. Okay, so client is buying calls because the net call long quantity is higher, right? DIA has bought calls, FII is selling call. So FII is selling futures, FII is selling call. This is index, huh?
Put, na?
No, the call is this two. This call
Okay,
and
okay,
this
okay.
call. Okay.
No, I saw of the column put, that's why.
Okay, yeah. So FII is selling index, FII is selling call,
Right.
call writing. Okay. DII is, but they are buying stock. Now I don't know which stock they are buying. This we need to identify. I'm not sure if we will get this information. Let's look at the put position. Next, net call position. Okay. Let's look at the put position. Put short is positive. That's why I'm keeping short ahead minus my put long. If this data is positive, that means they are bullish.
Clients and
So, and here it will be net call. This is net.
this is on index.
Yeah, this is on index. Net put. This analysis is very important. You can't miss it. But you need to do this daily basis. Otherwise, you won't be able to catch what exactly is happening. So if I just look at the index, FII is big time negative. 20,000 contracts they have negative position. Even on calls they are negative and put they are buying. So FII is like futures is short, future short, call short, put buy. All positions are negative. Okay, now let's see what DIA is doing. Futures they have bought but 6,000 contracts. Simultaneously look at the short positions in stocks. So what they are doing, they are trying to cover their position. They are short on futures stocks, but they are trying to cover their positions through Nifty by buying. So basically they are trying to hedge their position. But can you see this is minus 42,000 and this is just 6,000. Somewhere down they are also negative. If you see FII, they are buying futures, buying stocks, and they have bought worth 14,000 crores, 14,000 quantity. Yeah, but still they are hedging themselves by doing this, by shorting call and by buying put, and their index position is also negative. So overall they are also negative. DII is negative because they are hedging their future stock position with index. In call they have not bought much and put short they can't do. So this is FII.
Put short they can't do this.
DIAs can't short put.
Okay, only they can do call.
Call, yeah, they can just hedge their position. They can't speculate because derivative trading, shorting is hedging, is called as speculation.
Right.
So if they have any cash buying, they can do call writing.
Okay.
But in cash, you can't sell in delivery. Na? The short selling you can't do in delivery, na? In cash.
Right, but they can hedge and all.
No, they
Same
can't.
strategies they can't apply.
No.
They're not allowed. It's a
Not
rule.
allowed. Yeah. So this will be always zero. So FIA, DIA is stock buy. Here they are buying stock. Here they are selling stock and hedge with futures, future and call buying. What's happening? Future and call buying. They both are basically negative on the market. Okay. Client is bullish. See this. The index position is bullish. In stock, though they are little negative, but still index position is bullish. Look at the call amount of call that they are buying. 70,429. Look at the put they have shorted. 23,670. Now we don't know what will happen to client because they are completely against FII. See the position, right? See this position. See this position. See this position. And see this. But I don't know why they are so bullish.
It may not be the same clients who are here.
No. They have their own other different categories. So
उनको एक रिटेलर जाके कैश में खरीदेगा वो पुट करता नहीं है थोड़े ऐसे ट्रेडर्स है
नहीं पर overall फिर भी clients are very bullish, are bullish basically.
मार्केट फॉलो
Now we don't know whether this client have any information or not, but this is the case.
Okay.
Let's look what proprietary desk is doing. Future index bought, future stocks they have bought, call they are writing is big, and put they are buying. So eventually even pro is bullish, bearish, but still they are okay. FII is very bearish, little bearish, completely bullish, and little bearish. So this is how you understand this particular sheet. I'll show you how exactly to download this again. Go to equity derivatives, products, equity derivatives, and in equity derivatives, we went to participant wise trading volumes, right? So as of Friday, okay, this analysis you need to do every day. If you guys can automate this, please do that. This is very much required.
This can
This can be done easily. Okay, which is great. If you can do this, then please do that.
This will not be major.
Yeah, so basically from this thing you need to download this, and what you need to do is every day, for example, this is today's card, this is Friday ka data. We will have day by day data. For example, Friday was 28. So this will be 27. Like that you go behind. Okay, this is FII ka position. What is FII doing? In index future, in calls, in put. Then here it will be DII. Again, DII will have these 3 line items. Proprietary desk and then client. Now, if every day you track this and every day you fill this data like that, so you will come to know what is the strategy of FII.
Right.
Now you are getting, now we are trying to do, now we are trying to be a policeman and trying to see what FII is doing, what DIA is doing. This is very much important, and I advise you guys to do this without fail. This will help you in finding what is the position of the FII and DII. Okay. The next important file here is, sorry, I'll give the link now.
नहीं फाइल का नेम कौन सा फाइल है
Participant wise trading volumes. Go into products, equity derivatives, and in equity derivatives go in the file participant wise trading volumes.
This was the first file.
First, okay. What is the exact part to get the bulk and block deals Excel? Okay, please share the participant wise volume analysis Excel with us. Okay, okay. This is our participant wise volume. Okay, participant wise volume. This is done. I will show the path here also. Go to this particular link, products, equity derivatives, and the file name is participant wise trading volumes. Okay, so I am pasting this as cell comment. Okay, please refer here. Participant wise trading volume. Okay, now she also wants bulk and block deals. Okay, I'll give you that. Bulk and block deals. Products, go into equities, go to current markets, view all end of the day reports, bulk deals and block deals. Okay, I am copying this. Again here, let's make it this bulk and block deals. Okay, I am pasting this here. Fine. Okay. Anything else, Vidhi? Okay, yeah. Products. Now we are into equity derivatives. Let's go to current market reports, view all daily reports. Oh, where were we? We were here. We saw this file. Okay. Now we will look at participant wise open interest.
Okay.
What is this? Allow. Yeah. So this is open interest as of Friday end of day.
Right.
That was volume.
Yeah.
Basically trades done on Friday, and this is after the Friday end of day. What is the number of contracts FII, DII, clients and pro have? Now again we will do same analysis over here. Where is one? Okay. Two lines I have to do, right? Let's see here. So if you see end of the day report, okay, now at the end of the day client has bullish position 115606, and look at DII also has bullish future position. FII is negative, right? Let's look at stock.
Reflecting the trading volume.
Exactly. Look at the DII. Look at the amount of short they have. FII is hardly bullish. Pro is negative. Call position. Okay. Client is positive. DII is positive. FII is still positive. Now see this. FII, they have shorted index. Okay.
Right.
And they have bought calls. So
Right.
basically they have done a strategy of so they are selling the futures and they are buying call. So basically what they are doing, they are trying to hedge their position.
Right.
In case market goes up, at least these call positions will help them. Okay, let's look at put what they are doing.
Yeah, I don't know the strategy game. That was I understood.
That's fine, no worries.
Games in
Practice,
actions
practice,
or-
practice. Let's look at client what they are doing. They are bullish because they have shorted put and bought smaller puts. So ultimately they are bullish. DII they are negative. Look at the FII has bought puts. FII has bought puts. This is what. See here, since they are not allowed to short, that's why it is 0 0. While doing analysis of DII, just keep this into account, right? Always keep this into account. Now look at the FII position again. Look at the amount of put positions they have, and this is for the March contract.
Right. Now
See, FII future position is for the March contract. We don't know whether this call position and put position is for which March. For current Thursday, for next Thursday, or for the monthly Thursday, right? So you need to track this on daily basis. Again, this is also very, very, very important file.
Okay.
So ultimately, it is not that FII always win, but majorly if they are bearish, so you can understand what is happening or what they are trying to do. Again, what you will do, you will create this on daily basis and you will track. So if in index, if for example I am tracking this FII, and if every day I am tracking and they are shorting, they are adding new shorts, so I can understand that FII is bearish on the markets.
Right.
What are they doing on calls? What are they doing on put? What is DII doing? What is client doing? So this is the real analysis or data analysis what is required to be done. Now, if you compare your this file, what you are doing this right now, and if you compare this with the open interest data, you remember we have that open interest file?
Option chain.
Not the option chain. In futures we do that. I don't have my that file here. You have the other file? Let me check. Yeah, I have. Don't worry, I have. Acha, this is the older file, right? I don't know this.
वैशाली
No, I'll have, don't worry.
मनीष का फाइल है क्या वो ऑप्शन चेन वाला?
Let me delete this. This is.
Excel files.
हाँ
I have, don't worry. I have on my email ID. Oh, I still need to make those strategies. Huh? I forgot completely. Yeah, built up analysis. Now, this is the built up analysis which we do. What we do, we try to see the futures data for current month contract, for next month contract, and the far month contract. We take the spot data. Okay, I am taking the open interest and change in open interest for all three contracts.
yes.
Current month, next month, far month. Then this is my spot data. This is my futures data. What is the premium and discount? What is the overall cumulative position for all the contracts? What is change in OI? What is change in price? A change in OI and what is change in price? Accordingly, I am telling what is happening. Whether there is fresh long or whether there is long unwinding, short covering or put buying, whatever.
Yeah.
Okay. I need to compare my this file with this, with what the big players are doing, especially FII, DIIs.
Okay.
Suppose if here I am getting that okay, there are fresh shorts and that is confirming with that okay, FII is shorting. So I can understand that majorly shorts are being done by FII.
Right.
Now earlier this data was just giving me that there are fresh shorts in the system. That today someone shorted in the system. Who shorted we don't know. This thing will answer.
Okay.
Here I am getting net change in position is 1,58,000. Okay. Whatever is the price 1,58,000 and I will match the same thing. Try to here. I will try to match. Out of this 1,58,000, if 75,000, 80,000 is been short by FII, then I can tell okay, FII is shorting.
Right.
Right? So this is the second level of analysis that we are doing.
Right.
So this data, this analysis you need to do every day. Accordingly, this is just futures ka data. This is just futures. You need to create options ka data also. We don't have here.
Across the strikes का sum up करना पड़ेगा ना?
Huh?
Across हर strike price वो volume लेके करना पड़ेगा.
Take ATM strike and
तो
basically
match होगा क्या?
no, it will not match, but at least you will come to know what's happening. What's happening in
मतलब
the
वो overall भी लेके कर सकते हैं क्योंकि हमेशा नहीं करना.
huh. Otherwise, even if you are doing, see, that is what I always try to do. I take this data, I take this data, and I try to see with option chain what is happening. Now here, if I see this is volume data, FII has shorted call and they have bought put. I will try to match this. Now this is complete Nifty and Bank Nifty. Yeah? Unfortunately, we can't get bifurcation, and we don't know in which strikes they are playing.
Right.
That is the thing. But at least you can understand what is FII doing and what is DII doing.
Okay.
And then if you are like following FII, see whether that is helping you or not.
Right.
Okay. So this where is oh, okay. So this is open interest ka data. I am again copying this into fundamental analysis. Participant wise open interest. Open interest. This is also very important. You need to track this daily. This is the link. I'm pasting here's the link. BD has any query? No. Okay. Fine. This is done. So this analysis, if you do on daily basis, this will help you to gauge what is the overall position in the market. Helpful, right? Now you know this is second level of analysis, data analysis, which needs to be done.
Okay.
Right? If you guys can automate this, with one click, this will be really good job. If you can do this.
अब वो फाइल डाउनलोड का कैसे है?
Hmm.
मतलब डाउनलोड मतलब वो उससे मिलता है पाइथन में जाके देखना पड़ेगा वो किया नहीं
Yeah, I mean just try to automate this thing. If this data can be done, this will be like very helpful to you guys. Okay, this is done.
Right.
Now look at this data, FII derivative statistics. Why is it coming? So this is only FII data. Huh? This is just FII data. They bought contracts worth this. This was the amount. They sold this much. This was the amount. So in net, this was the amount. This is the open interest. Okay, this is the amount that they have sold. Bought is this and this is selling. So they have sold 1,631 crores net.
Right.
This is as of 28th of February.
Right.
Okay. Now this index options, we can't take this amount, this and this amount, because it includes strike price, which is wrong. If you see options value, it includes strike price into quantity. I don't know why they are taking strike price over here.
And which strike price?
Suppose they have bought 11,500. So this is showing as 11,500 into this. So basically this value is not reliable. We need to see premium amount.
Okay.
What is the premium into quantity? We don't need strike price here. So while looking at this FII derivatives, don't look at the amount figure here. But we can look at the contracts. What is the contract? This is for options. Index options they have bought and they have sold.
Even for a stock, that same thing applies?
Exactly, yeah. 632. The again we can't do this analysis because index options bought, this includes call buying and put buying. Now call buying is a bullish position and put buying is a bearish position. So generally we can't conclude anything, but still at least you can gauge what is the amount, what is the net futures position they have, whether they have sold or whether they have bought. This will give you the idea in terms of value, right?
Now looking at this data
Yeah,
and every day's index closing and moving, we can plot against each other also.
we can try to do that. We can see what is the correlation between this data, the amount of buy sell in crores, whatever amount, and futures data. Sorry, and Nifty ka movement. If this is negative and Nifty is also negative, we can find correlation between both the datas, whether correlation is high or not. Okay. Which other files we have? Exposure limit file, not interested. Client wise position limit, not interested. Daily volatility, you can see what is daily volatility, that is fine. Top 10 clearing member volumes, let's look at this. Nah, not interested. So basically the top 10 members of the Nifty, it shows what is the volume done by them. I have never analyzed this data. I'm not sure whether you can infer anything, but yeah, we have this data. Participant wise open interest, and this we cover. I have to cover one more thing. Yeah, just a second. Haircut, securities in ban period. You will get securities which are in ban period. So basically, no fresh buying and selling can happen. Only you can close the position. Now this is also very important data.
Which is this one?
Market wide, what is the name here? I'll give you the name. Client position percentage greater than equal to 3% of stock MWPL. So basically client position where they have more than 3% of open interest. Yeah, yeah. So if I look at this data, see this. You need to capture this data daily, huh? So these are the stocks where the clients have more than 3% open interest, in simple words.
Okay.
Okay. Now see Adani Enterprise. Look, there are total 8 clients who have more than 3% open interest with them.
Okay. Each client.
Yeah, this is for client 1, client 2. This is client wise. These are different entities.
Right.
So that means 8 clients at least, they have more than 3% open interest. So there is huge interest in
And
Adani.
this client means that our broker?
No, clients means any client. This could be anyone, FII, DII, anything.
Okay.
But these people have more than 3% open interest. Whatever is permitted, of that 3% is with them. More than 3% is with each client.
Okay.
Now you can see there are total 8 clients interested in Adani Enterprise.
Right.
Adani Enterprises, yeah. Now whether they are bullish or bearish, that information we can't get from this info.
Yes.
You need to look at other data points. Look at the open interest built up and everything.
Right.
Okay. Now let's look at GMR Infra. Someone is interested because 6 clients have open interest in this.
Right.
Okay, rest all is fine. Jindal still C. Total 5 clients are interested. Now whether they are short, where they are long, we don't know. But
That
what
we can get from that options in.
exactly? So for example, yesterday was 28th Feb, right? What is the overall open interest of these clients? Okay. This I got for 28.
Right.
If I get this data every day, I will come to know whether position is moving or not, whether these clients are, making new positions or not. If there is one more client who comes here, say client 9, sorry, and his position is again 3%. So suppose on Monday this happens. So now you know that on 28th there were only 30. The 30% open interest was there. Now there is 33%, means someone has added. Now I will go and see what is being done in Adani Enterprise. Futures may I will try to see with open interest and price, and options also I will try to see. Accordingly, I will come to conclusion whether bullish positions or bearish positions are being made. But this will help you in doing the analysis. But it is not that you do it today, you do it tomorrow, and day after tomorrow you go and punch your orders. You need to analyze this for at least 15-20 days for each client, for each company. Right? Good information. So at least now you know which are the stocks which are expected to move, because someone is someone has interest of more than 33% in Adani Enterprise. So obviously these people, either they are bullish or bearish. That's why they have, so the open interest is so high. The interest is so high. Imagine if you can catch their direction, what is the, what is the level of your trading then? This is what you need to match. Okay. So I will take this data. I am putting this in fundal added. Okay. I'm adding this as MWPL. This link. Okay. I'm pasting it here. Let me see if she has any queries. No. Good. Now this is done. This is done. Exposure limit file, this we did, this we did, this we did, daily settlement, market activity, top 10 clearing member, participant client wise we did, how copy, no, security and ban is fine, here this all is fine. This is one or two more files, where are they are? Just a second. And I see if I go historical data, if I go historical index data, if I go from here, you can download the historical prices, which I am sure you guys are aware. I'm just finding some other data points. Just give me 2 minutes. Historical data. Yeah, I guess this is the report which probably I'm looking for. Let me see here. Yeah. So this information will help you to get what is happening in each stock. Okay. This is the cash segment. Okay. Let's take the symbol Reliance. Let's take for past 3 months. Let's get the data. So This is the page which got open. So it says me the symbol, series, date, close, price, open, high, low, VWAP. VWAP for all. So you can see VWAP, how VWAP is moving. Accordingly, you can make a call. For example, let's look at here.
Can we take example with suppose we saw in this client position of greater than 3%?
Okay, so you want me to take that client, that company? We'll do that. Okay, we'll do that.
So,
Adani Enterprise, right?
it is-
Fine. Let's take Adani Enterprise. Get data. Okay.
Yeah.
Okay, so this position would have been made from January onwards, right? So we are not. Let's take data from January. Let's see data from January onwards. So let's first see what all data we have. Open, high, low, close. We have close. VWAP we have here, which is very important. Total traded quantity, turnover, number of trades, delivery quantity, very important, and percentage delivery also very important. Okay. Now let's see Adani Enterprise. Let's look at first VWAP. Okay, suppose I am on 2nd of December. VWAP is 209. VWAP is fallen, increased, fallen. 3 days VWAP has fallen.
Right.
That means I feel sellers are in control. Let's see what happens now. 206, right? Let's see what is happening now. 205, 205, 209, 211. Again it went up. So that means our analysis was wrong. Now 3 days VWAP is positive. That means someone is buying. If that is my assumption.
This is of December we are checking.
This is December.
Yeah.
I don't know what will happen next. Okay. 211. No. Again my assumption went wrong. But see this. I don't know whether this will help me in trading or not. Only VWAP. Okay, now VWAP is 217. Let's see. 216, 212, 28 means someone is shorting. 9, 200 no. I guess we are not getting any information through this. Okay, so this is not helping me. But let's look from January what is happening. Because so many people are interested in this thing, right? 213, 215, 222, 225, 229, 233. Now you are seeing, look at the movement. 231. Yes, 231, 239, 242. Look at the Feb. 249, 250, 256. From when we saw 209, almost 25% returns. So generally, if you can capture this and you are able to predict it right and at the right time, this is the kind of returns you can expect. Because this is where market is interested, right? No one is interested in Yes Bank. In this, I'm just telling you, in this, tell me, is there Yes Bank?
No.
Yes Bank is not there. But people are interested in Yes Bank. Retail people are interested in Yes Bank. If we had got this data somewhere, suppose this Apollo tire. If I am tracking this, if tomorrow there is one more guy with 3% interest, one more guy next day with say 3%, 3.
मोस्टली ऐसा दिख रहा है कि जो जिसमें दो चार से ज्यादा नहीं है ना तो उसमें पैसा एक साइड बन सकता है पैटर्न जैसे अभी इसमें बहुत सारे क्लाइंट हैं तो उसमें मूवमेंट्स भी अपसाइड डाउन साइड इतना है
Possible. I don't know. See, I have not did study on this thing, but you need to do that. Now, with if all this data can be automated, if yes, then this will be really good thing. Means you press one click and you get all the data.
अभी इसमें फाइंड दैट देखना पड़ेगा
Right.
इसके साथ फिर कैसा है कोरिलेट करना पड़ेगा यहाँ पे ये अडानी
Yeah, exactly. So you can see what is the kind of returns Adani Power has given in last 1 month.
Right.
Adani Enterprise, not sorry. So if you can capture this movement, if suppose, and then you keep on tracking, then This is the kind of potential. Okay, so this is why this data is very important. Now what I will do is I will download this file. Okay, so I'll open this file. Now I will do my analysis. Let's hide this. Okay, this is the closing price. Now what I will do, I will take the average of 8 days. We can take average of 3, 5, 8, 13. This I generally follow one guy on YouTube. His name is Nitin Bhatia. So basically this is kind of analysis which really helps. So I'll do average. This is average of 3 days, last 3 days. Average. This is average of 3 days. Okay, this is average of 5 days. This is average of 8 days. And this is average of 13 days. You can take whatever average you want. It's not necessary that you stick to these days, but make sure that you compare a good number of period. Like 3 is very short, 5 is little this, 8 is okay, and 13 is little long, right? So if I see this average, see, obviously last couple of days we know what's happening in Nifty. So your prices are like way too I mean the difference is very high. But see, for last 13 days the average is 247. Last 8 days average is 245. Last 5 days average is 240, and last 3 days 234. That means the average price is coming down.
Right.
Means someone is selling the stock. Obviously we know that what's happening in market for last 7 days. So as of now this analysis will not help you much, but in case it was a normal market, it will really help you to understand what is happening in that particular stock. Okay, so this is my average price. This is my average traded quantity, average turnover, average number of trades, average deliverable quantity, and okay, this is the percentage delivery quantity. This divided by number of trades, delivery quantity, turnover. Where is that amount? Yeah. See, total traded quantity is this amount in column K, and deliverable quantity is in column N. So if I divide column N with column K, I will get percentage delivery, right? So this is my percentage delivery, 12.6. So now see this, my price is falling, average price is falling, my traded quantity is more or less in the same range. That's fine. Look at my number of trades, number of trades has fallen. My deliverable quantity has fallen. So means this downside move is kind of a speculative because your delivery quantity has to increase. Now, if someone is selling in delivery, so your quantity has to increase. Now, if I am really bearish, then my delivery quantity has to increase. My delivery quantity is not increasing. That means someone is intraday may someone is selling, but he is like covering up his position same day. Okay, so this is the one analysis you do. Why I was doing Reliance? Because I personally track Reliance and I want to show you something.
Now, one thing I want to ask, and this is
Huh,
this is all end of the day analysis.
exactly.
Okay. Then once you conclude this, then
Hmm.
you can speak with Ankur. I have something in mind. If
For
you want it for this, if you want it on immediate basis, on every day, I can do it. Have hands-on. Correct.
if you can help me with
Yeah, I
this
can
in
do it.
automating all this will be like really help. Okay. So now let's look here. Let's look here. This will be interesting probably. 67.
Because this is end of day analysis. That's why this can be done alternatively in another way.
Okay.
Turan results on it.
Now look at Reliance. See the average. Look at the average. Decreasing means someone is selling. And look at this delivery percentage. 52, 57, 59 means someone was really selling very hard and there is delivery based selling. Yesterday, though selling has like the delivery based selling is low, but still it is at 56%, right? And look at the historical levels. Look at the historical levels 43, 42, 56, 52 is still fine, but majorly still you will find it is at 40 to 45 level. 39, 44, somewhere it is 60. 55, still 40, 40, 49. This is the average level. And look at here, it is 56. This is average. Okay, now average, the disadvantage of average is if you have extremes, the extremes you will not capture in average. That is the disadvantage of average. Okay, now look at this data here. Everything is fine. 40, 49. Look at the average. 43. See, here it was 55 on 31st of January. After that, look at here. 29, 49, 45, 44, 40, 44. This is the delivery percentage. Huh? 47, 32, 48, 38. But now look at this. From 38 to 60%. So your stock was trading day before at 1503. Something happened in the market on 20th of February. Look at the delivery quantity 60%. And let's look at the traded quantity. See, look at this 64, 50, 60, 97. Here it was quite huge. Let's mark this 62, 62, 69, 69, 55. But here it is right?
Yes.
That means some A quantity is big. The traded quantity is big. Delivery quantity is also very big.
Yes.
Someone has sold Reliance on delivery basis at these levels 1485. If anyone is holding this stock, should have exited by 1485.
Okay. But analysis.
Exactly. Now look at the other day. Look at the quantity. Look at the quantity trades. Boom, boom. Look at the delivery percentage now.
Still good. High that then historic.
So whatever was trading over here, look at the total traded quantity, some 64 lakhs, I guess. Yeah, 64 lakh 38,000. उतना तो भाई यहाँ पे डिलीवरी है. 83 lakhs का तो डिलीवरी है. 81 lakhs का डिलीवरी है. 99 lakhs का डिलीवरी है. So someone is shorting Reliance on delivery basis. Means investors are exiting this stock right now.
Right.
Right? Let's look at the Reliance का chart. See, this is how you combine all things. On 20th we saw this is 19th ka candle. This is 19th ka candle. This is 20th ka candle. Volumes have increased, but still it is fine. You know, the fall is not that big. But someone, if we look at data, this should like really, you know, strike you. If through my computer or through algo, if I can capture this,
If it's end of day,
see,
we can capture.
if this,
Not
see,
really.
this is end of,
For this kind of file, other kind live kind of data, we have another.
no. So this is end of day. So immediately I know that boss delivery quantity is 46 lakh 89,000, which is more than, which is almost more than 50% of average delivery.
Right.
So here, you know, if someone shorts here at this level, so imagine if you are right, what kind of move you can capture from 1487 to whatever level.
Yeah.
So this is why this information is very, very important. You are getting why I'm telling you? This is second level analysis that I do. What people will do normally, or what we normally do, we will go to Reliance. Okay. Okay. What's happening? Change in open interest is negative and price has gone down. Long unwinding. Okay. They will go to option chain. You will just find out, okay, what's happening, where is support, okay, this is my resistance level. Is there any support right now? No, I don't see any support. There is no support. In fact, I can see people are covering their shorts here. Right, I don't see any support here. Plus this is the level, this is what you see. Let's look at this now.
Which was this file?
Which?
This file.
I'll give you. I'll paste that in the fundamental analysis. This is the data which generally shows me what kind of move market can give, and if you can capture this, this is second level analysis that you are doing. Perfect. Imagine for all top 50 stocks, if we can run this.
All top 51.
Just giving an example that, you know, if we have algo desk and for top 50,
But end of day.
end of day data, if we are doing this, imagine what kind of information you will be having and whether you can take benefit of this information or not. Okay, so I am again pasting this data in fundamental analysis part, stocks. Okay, I'll paste the link also so that you can also, here is the link. Okay, I'm pasting the link in the Excel file. Vidhi, everything clear? You are understanding everything what I am doing? Oh, right time. It was just 1 minute. You are able to understand everything what I am doing, right? And why I am doing? Okay. You have any query, then ping me. Okay. This was the file which I was referring to. I have the link. Don't worry.
Okay.
I have pasted the link in the file. I'll mail it to you guys. Okay, we went to equities, we went to historical data, we went to, from here also you can get many data points. See, what I would ask you guys is, go through this products page. In products, go through all these five: equities, indices, mutual funds, equity derivatives. These four tabs will help you a lot. Okay. Mm, let's see. I guess we have covered mostly all the files from NSE website also. One more thing. Now I don't know from where we will get this data. I want traded value for cash, for futures, for options at from one place. I need that data. So my model will do is I will try to find correlation between futures price. Oh, no. I'll give you. I'll tell you. Give me some time. I'll tell you what exactly information I want. So basically, what I want to do is that whether my Nifty has more correlation with futures or with options, but I am trying to find it on other file. Give me some time. I'll think on that. So that's it. That's it from NSC. Obviously, there are many more data points available. We can obviously explore more, but at this point of time, I have this many sheets. So if we can automate all this thing and we can download this data through one click and we can do analysis through one click, this will be really really good. We were just discussing about this Reliance. Say this. The average delivery percentage on this day, 20th of February, it shot up like anything. Look at the deliverable quantity, which is 46 lakhs. It is almost more than 50% of your average delivery. See, my average delivery is 66 lakhs. Sorry, average traded quantity previously was 66 lakhs. On 20th of February, my traded quantity was 77 lakhs and my delivery was 46 lakhs. Means someone has sold this on delivery basis. Means this candle on 20th of Feb, some big guy has sold the Reliance from his portfolio. And if you look at the average volumes and all, this all is very low. Still, if we see this line and if we see this red bar is still below the average volume. So if you look at charts, you will not come in, you will not gauge whether this is a delivery based selling or not. If you look at the price, this particular candle is again not that big to give you a very moment that okay, what has happened. But if you look at this data is telling you something big. That is why I was again and again tracking Reliance, why someone is selling, why someone is selling. This was the reason. Yeah, that's it. I guess that's it on NSC part also. Session I need to close. Okay. Vidhi, everything clear, right? So we are closing this session right now. So we are done with fundamental. We also went through all the important reports from NSC website. Next session would be on technicals, right? So we are closing it for the day. Okay, thanks.
हमको ये मनीष ने फिलहाल जो फिलहाल उसको